Now let's talk about the UK supermarket giant Tesco, which is the world's third biggest retailer. It is slashing the prices of hundreds of branded products as it battles the rise of German discount supermarkets Aldi and Lidl. The company is funding the price war by slashing hundreds of millions of dollars in costs. It says it will close more than 40 unprofitable stores and shut down its head office. Tesco brought in ex-Unilever executive Dave Lewis in September to revive its fortunes. But he's been very busy since he arrived because the company was rocked by an accounting scandal and for-profit downgrades. Well, I'm joined by Sarbjit Chahal, who is from the investment advice service Fat Profits. Nice to see you again.
Good morning.
So they've just released their trading numbers for the key Christmas period and lots of news of changes. It was important that Dave Lewis seemed to have a good action plan today, isn't it?
Yeah, certainly. I think that he's made no secret that he's got three key priorities. One is to bolster up the balance sheet. The second, increase competitiveness. We mentioned there about Aldi and Lidl taking more market share. And thirdly, inspire some confidence in the brand and build up that transparency. Obviously, the accounting scandal has rocked the brand in a very big way.
And it's also seen the Tesco share price plummet to a degree because of concern about where the company is going. The UK division is by far the biggest part of the company. They've said they're concentrating on that, and today they've announced a new chief for the UK side of the business.
That's right. They brought in Matt Davis over from Halfords, and I think that's an important part of building the competitiveness back up because he's had a lot of success at Halfords, known to be very good with people there, and I think that's what Tesco need is to re-engage with their people, certainly. But if we actually look at today's statement, the fact that they're closing a head office in 2016, closing the Cheshunt office and opening, just having the Welwyn Garden City office, it shows that they're looking to focus on trim the fat down and closing the 43 stores as well. They're not telling us what they are just yet, but all we know is that they're unprofitable.
And for those who are not familiar with Tesco, I mean, they have these massive sort of out-of-town stores, which are like hypermarkets, don't they? But at the same time, they've got many, many of these very small Tesco Express or Metro stores, don't they, sort of dotted around the UK. But there wasn't much said about their overseas business. We were expecting perhaps them to withdraw from some markets overseas.
Yeah, that was quite disappointing, really, because in terms of shoring up the balance sheet, all we've really seen is the sale of, or the impending sale of Tesco Broadband and Blinkbox. That's going to be sold to TalkTalk. But there was a lot made earlier on in the year. Would we see the Thailand or South Korea business? Thailand rated at £5 billion, South Korea £4 billion. So it's a big chunks of capital and equity that could have been raised there. But we are expecting further on that at 11:30 when there will be another announcement.
All right, thank you very much indeed for now, Sarbjit. So, of course, we'll see the reaction to the news from Tesco.